So, the big day is finally here. After months and months, it seems, of speculation, endless pages of newspaper articles, we've finally seen what Rachel Reeves has in store for us in her autumn budget. We figured who better to go over the key points impacting the mortgage and housing market than our very own David Hollingworth. Dave, welcome.
I
Let's get straight into it. So, in the run up to this announcement, we've had so much news in the press around what could happen, what might be announced. We heard about scrapping stamp duty. There was talk about a tax on higher value homes, national insurance on rental income. Just a small sample of the speculation that's been flying around the last few months. As of lunchtime today, now we know what has actually been announced. Let's quickly run through the main points, and then Dave will talk about what it might mean for potential buyers, house movers, and landlords. So, firstly, one of the key ones that was announced today, the high value council tax surcharge, or the mansion tax, as it's been dubbed. So, we are looking here at houses valued above £2 million, subject to a £2,500 annual levy. That will go up in bands. So over 2.5 million, that goes to £3,500. 3.5 million is 5,000, and properties worth over £5 million are subject to a £7,500 surcharge. These will be levied on owners and collected alongside council tax. Next up, we've got the cash ISA reform. So broadly, this is they're having the limit reduced for under 65s from 20,000 down to 12,000. There's a new rate of tax on property income coming in at April 2027. So that would be an additional 2% on the existing rates that are paid by landlords at the moment. In addition to that, there's potentially an increase on the rate in dividend income, which might impact those who are kind of working through a limited company. And then the fourth point, to cover off something that hasn't been announced, there were no changes announced in stamp duty, which maybe wasn't widely expected, but it was certainly talked about quite a lot, and there was a lot of speculation around that as well. So let's take a little bit of time, go into a little bit more detail around some of these things. So starting with the high value council tax surcharge or the mansion tax, Dave, what are your thoughts on how it might impact sort of buyers and homeowners of houses of those values?
yeah, so I think overall it could have been worse. I think there was a lot of speculation around this. Initially that it could have been on lower value properties. So actually coming in at 2 million plus is at a higher level than some had thought it may start to hit. But now at least we can start to understand what the actual charge might look like and how it will be approached. There's still bound to be loads of questions as we get closer to this being put into place. But actually, maybe it's not as bad as homeowners might have been worrying about. Now, any new tax is likely to risk distorting that part of the market. So if you are in and around those kind of initial bandings, there will be questions around, is that going to affect buyer activity? But the way that it will be initially implemented is that there'll be a revaluation. So the valuations office is going to look at those properties that are above 2 million, and that will then set the relevant bandings for those properties. So it's not something that a buyer can just drop their offer price and avoid that banding. As you said earlier, it'll be caught by council tax and charged alongside council tax. But that is going to require a revaluation, which of course hasn't taken place for decades with council tax. Whether it's actually a big enough charge to actually distort the market substantially, I'm not so sure. I think it's been set at a level that will perhaps just be subsumed into the other costs of buying. And hopefully what we won't see is buyers haggling too hard, trying to just pull down their offers a little bit to try and offset the additional running costs that this tax will bring with it for bigger properties. The one thing that I would say we need to look out for, looking a bit more, digging into the detail a little bit, the proposal is that those charges will rise in line with CPI inflation. So that will be an annual increase. So these are not flat charge once it's been set out. And the other thing that I noted was that there's plans to revalue every 5 years. Now, if those bandings don't shift, then that potentially, and we'll have to wait for more detail, but that potentially could see more properties brought into this taxation, and more properties edging up into higher bands over time if house prices continue to climb. So a lot to take in. I it will take time to implement, and so I think potentially the disruption to the market at that end could be more limited than we'd previously feared.
Excellent. Onto the cash ISA reforms then. So for under 65s, the cash ISA limit is being reduced from £20,000, which is the existing limit, down to £12,000. What might this mean for lenders and savers?
Yeah, so on the face of it, I guess this looks like one for savers, limits their options around where they want to put their cash and whether they can put as much of that into cash ISAs as they previously would have liked. Um, Clearly, it's going to limit it now to £12,000 per annum. But the implication of that, which lenders have raised, is does it mean that it's going to constrict the amount of cash that's going in? And this is particularly for building societies. They fund their mortgages from retail savings. So if we see more limited amounts going into cash savings, that could potentially push up the rates that have to be paid. And that in turn could mean that there's cost implications for mortgage rates. So the building society has been making this point in the run up to the budget. Um, Perhaps they've helped to mitigate that. The reduction to 12,000 potentially could have been tougher. But actually, we'll have to see whether that has a material impact on mortgage rates, which of course have been coming down a little bit recently. So just one to keep an eye on, I think, as to how that will impact building societies in particular. The other big
Brilliant.
one on the ISA side is lifetime ISA. Now, don't want to worry anyone. That's continuing, and the £4,000 per annum limit has been uh, underlined. But there is going to be a consultation on a new product, a new simpler product that could replace the lifetime ISA. Now, of course, the lifetime ISA is particularly valuable for aspiring first-time buyers or for those who are saving to retirement. But in the stuff that we're looking at with regards to property, you do get that government boost to your savings. So it's a particularly effective tool for aspiring first-time buyers. I guess that will raise questions about what the new product may look like, but we won't know until the consultation gets underway next year. I would hope, and this is purely my opinion, but I would hope that the existing lifetime ISA users, their their hopes and their requirements would be factored into that consultation.
Brilliant. So that consultation's happening in springtime.
It's scheduled for early next year, I think. So, yeah, so we'll see how when the dates start to come through on that.
Brilliant. Okay, on to the property income tax. So a 2 percentage point rise has been added on the rate of income from properties. So potentially a higher burden on landlords.
Yeah, so there have been speculation around whether the Chancellor would look to put national insurance in place on rental income. Um, Instead, what we're seeing is an increase in the rate of income tax that will be applied to property income. So I'm afraid it does look like it's another blow for landlords, who, of course, have been hit hard by a variety of different factors. Um, Certainly, tax relief on mortgage interest has been limited in recent years. Higher interest rates and tougher lending criteria have all fed into how landlords are feeling about the market. Even the OBR is pointing to the fact that the increase in property tax will impact potentially the supply of rental property. And of course, the fear will be that rather than raise additional revenue, it could ultimately push up rents for tenants. So we'll have to see how that plays out, but it's certainly not great news for landlords.
Okay. And then on to the sort of the one thing that wasn't really announced, but people might have been expecting, was the kind of absence of any changes in stamp duties or anything like that. So, I mean, generally business as usual here.
Yeah, absolutely. I think stamp duty is always an area when it comes to property and budgets that gets a good mention. Um, Lots of talk about whether there could be incentives to either further help first-time buyers who already have some relief from stamp duty, um, or whether it could be used to help encourage downsizing for those older homeowners who are perhaps in larger properties that could be freed up for families. None of that's come to pass. Stamp duty's been left well alone. So as you say, yeah, business as usual on that front.
And then just kind of your wider thoughts on what the impact might be on the market, interest rates, what that general outlook looks like.
Yeah, so I think aside from how that might affect the property market, I think there's some talk around the property income tax might just have a slight put a slight weight on house price growth, but nothing substantial. I think mainly a lot of people would have been worried that today's news might have been received badly by the markets, and that could have turned into an impact on mortgage rates. The Chancellor's clearly been really careful that that was something that she wanted to avoid. And it's so far, it seems that the market jitters have been completely avoided. So I think we've seen fixed rates coming down from lenders. Mortgage rates shouldn't be affected by today's news, and it'd be more a case of how homeowners get to grips with what it means for them and how that impacts their mortgage choice. So I'd expect that we'll see fixed rates remain really popular with homeowners, particularly now that they may be looking at some additional costs from some of the other taxes that have been put in place. Yeah, how is that going to affect their month-to-month budget? And therefore, I'd fully expect that fixed rates and the stability that they give on the mortgage front are likely to be the product of choice, which the majority have been going for some time now.
Brilliant. And I think that pretty much covers everything. So there's obviously still a lot of detail that's going to be coming out over the coming days and weeks around some of the announcements made. All these things are still going to be working themselves out. So just a reminder, everything we've talked about here today is purely informational, shouldn't really be considered as mortgage advice. Remember to please always consult a mortgage advisor before making any significant decisions. Well, thank you very much for your time, Dave. Thank you for everyone for tuning in. Keep an eye out for some future videos and webinars, or visit lnc.co.uk for news, mortgage rates, or to get in touch. Thanks again from all of us at LNC, and we'll see you soon.